Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. Could you just let me know whether you can hear me okay and whether you can see the risk disclaimer there, the chart in the background, just so we know we're all okay to get started. And while you're doing that, I'll just have a look at the risk disclaimer. Just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept that losses can and will and do unfold. Doesn't matter what kind of trading approach you take, there always will be losing trades. And actually, that's one thing I wanted to start with today, is have a look at perhaps a bit more on the psychology of trading. Been swapping a few emails with Eric down there in Australia, who will probably be viewing this on the recording as it's quite a late night down there at the moment. And it just became more apparent that no matter how good you are at the technical analysis side of things, there's always things that will actually trip you up once you start to become sort of a live trader and start to go onto that. So I don't know what you guys in the room think as well, is that you know, the psychology of trading, particularly when you start, is one of the hardest things to actually get your head around. I just want to go through an example from last Friday to show you what I mean. We had a look at this a while ago, and I just think it's important to come back to touch base with this at the moment. Yeah, because this is one of the things we want to try and do with you guys in this trading room, is not just show you how to use MTPredictor, but actually hopefully become better traders as well. So I want to go back and have a look at Friday, which was this day here, which is July the 19th, on the YM in particular, because this is a good example of some of the psychological issues that can come up when you're actually trading. For you guys who are new to MTPredictor, just a quick review of what we do, and this will become more apparent as we get into the depths of this example, in that we don't view MTPredictor as a black box system. I personally don't think black box systems really work over a long period of time. The reason being is that markets are basically random about half the time. In other words, half the time you really can't see what markets are doing. In other words, they're just chopping around pretty much random like yesterday and you know what's happening today. So the question being is, how can you decide when a market is not random? In other words, it's getting into a clearer picture. Well, for this, we use the higher time frame chart. And actually, there's probably a hint of what I'm going to do because there was a 15-minute DP up here. So I'm just going to take that off. And now let's just show you how I go about this right from scratch. If you're, say, trading daily charts, you can use the same approach. You'd go to the weekly for the higher time frame picture. If you're, say, trading some 4-hourly Forex charts, you'd perhaps go to the daily. You know, you're looking for time frame between 3 and 5 time frames higher. So what do we do? Well, let's go out to the 15-minute chart here. And remember, I want to look at last Friday, so which was, I'm just going to clear my analysis off there, which was July the 19th. You can see there, so that bit there is July the 19th. So I'm just going to use trading mode in our standalone version. I'm going to use this throughout most of the webinar today because I prefer our trading mode than NinjaTrader. I will actually skip over to NinjaTrader a bit later to have a look at using the trade module on this as well and how that will help you. But let's start by looking at this. Right, so how do we then decide on what a market's doing on the higher time frame? Well, for this we use our DP, decision point, support and resistance zones. So this was the market basically as of pretty much the end of Thursday. And for you guys who've seen the webinar, not the webinar, the video I did from a great DP long trade on the low of the day on Thursday on the ES, it came in here very nicely. You can have a look at that on the website. But so what do we do? Well, the most important and the first place to do a DP is off the last swing to the higher low. So I'm just zooming out a bit here. And you can see pretty obviously there's a major low there. So this is the last swing. You can see software's joined that for you. There's the last swing going down. So you go up to this pivot, right mouse click, do decision point. Can you see how that gave you an area of resistance in advance. In other words, it's on the chart before Friday even opened. So if I turn training mode off, let's see what Friday actually did. And here is what it did. It came up, it made a beautiful high there. It then declined down. It then went up into here, which would have been a potential wave 2. It then, if I clear that off, it then declined down into a wave 3. I'll just put that DP back on again, sorry about that, into a wave 3. So this is exactly what we're looking to catch. We're looking to catch when a market makes a meaningful reversal off a higher time frame, which is what the time frame we're on. The favorite trade we like is what we call our wave 3 trade. We'll see that in a minute when we come down to the 3-minute charts. In Elliott wave terms, this is the wave 2. We're then looking to try and trade the wave 3. And as you can see on the 15-minute chart, that's exactly what unfolded on Friday. So let's now move down to the 3-minute chart and let's just see what actually happened as the day went on and have a look at some of the psychological pitfalls and struggles that you would have had as the market was moving with you throughout the day. Just going to use training mode again and jump back here to a bit early in the day. So we've seen what the result is. We've seen the result from the 15-minute chart. It was actually picture perfect Elliott wave pattern. In other words, it worked absolutely splendidly. But of course, that's in hindsight. So let's have a look as we go. So this is what you'd have seen earlier in the day. The market went up, it went into the 15-minute, there's the 15-minute resistance, you can see. It made the high there. This is what we're looking for. We're looking for the market to make a meaningful reversal off our higher time frame support and resistance zones. When it does that, we deem that the market is in a clear picture. In other words, the pattern is starting to become clearer. You're like coming out of the fog. So this is why I developed my isolation approach to Elliott wave. And effectively what we're saying is, right, we're now going to start now. It's effectively like you suddenly open your eyes, right? You open your eyes, it becomes clear. You're going to start looking and start looking now. You're not going to worry about what happened before. You're not going to try and fit in the Elliott wave patterns with what happened before, because half the time what happened before is random. So it doesn't tend to work. And this is why I think Elliott wave has fallen down so much over the years, is people have tried to fit 100% pattern into an environment that's random half the time. Now, I don't know about you guys, but that just doesn't make sense to me. I think the reason they've done that is because psychologically as human beings, we like to have certainty all of the time. We like to know where things are going. But I'm sorry to say, guys, in this environment of the stock market, certainty is something we do not have. Right, you're all with me so far? Just perhaps let me know on what you think so far. So here we are. The market's then made a meaningful reversal off that higher time frame resistance. Market's starting to go down. Our MTP trend is black. In other words, it's showing you that we're in the process of making a potential reversal. So now we have the confidence that the market, or the large degree trend, is down. So if it's down, should we be looking for buy setups? I'm going to answer that because it's a fairly easy one. No, you shouldn't. So even though our MTP trend is grey, this is the problem you see that will happen is if people look at our software without coming to our training rooms like this, is they'll look at this and think, MTP trend is either way. This could be a potential buy setup. This could be a potential good one to take. So the uninitiated person will look at that and think, oh yeah, that could be quite good. Particularly as once you go forward a bit, they're thinking, hey, hang on a second, this is actually starting to go quite nicely. This would be great. Now, of course, this is where the market throws you curveballs, is sometimes these trades will actually work out well. These will actually go to the first target and make you a small profit. So the games that the market plays on your mind, the psychology. So if you were an advanced trader and you did like the look of that for other reasons, this is when I say you move your stop to break even. In other words, you're against what you perceive to be the large degree trend, and therefore you need to be more aggressive with your stop loss. Someone will say, why am I even mentioning that? Surely I'm teaching that here you should be looking for the short side, shouldn't even be looking for the long. Well, this is because every single one of you is different. Every single one of you has a different adversity to risk, a different aggressiveness, a different way of looking at the markets. So MTPredictor is not a black box. It is a tool to allow you to evaluate the market yourselves. So that's why one of you could look at this and think, I don't like the look of this, because the probabilities are telling me the large degree trend is down. Someone else could say, actually, I think I like that setup because of, for whatever other reasons, perhaps because it went back to the previous high there. It could be that there was support there at that previous high. So you could look at that technically and think, well, that could be a bounce. I'd like to take it. But can you see what I'm trying to tell you is that it's probably against what the downtrend is. Therefore, that's when you bring your stop to break even. In other words, when you are perceived to be against what the large degree trend is, and you're being a bit more aggressive, in other words, you're pushing the boundaries, that is the time to be more aggressive with your stop loss. Remember, we use position sizing to vary the number of lots, contracts, or shares. So when you're wrong, and you will be wrong, the initial risk is kept small at 1R. We can change the different account size to evaluate that risk and number of contracts for you. So let's move forward. And sure enough, the market starts to go down and obviously went below that level there. And of course, if you were aggressive and in that break even, you'd have been a break even trade. If you hadn't have done anything, obviously you would have done nothing. That's it. So now nothing's changed. In other words, the market's gone down. This would have been nice if it had been a nice clear 5-wave sequence, but it wasn't. It was just a bit choppy. This happens sometimes. And you're still looking for potential sell setups. So perhaps you have this is when you have your scanner running, and this is when you use the scanner to confirm the kind of trade setups you're looking for, rather than just alert you to something new that's happening. So this is what I keep saying. I want you to work ahead of the market, not in reaction mode behind the market. As you move forward, nothing's happening. You're all taking it nice and easy, probably starting to have a bit of lunch there. Oops, went a bit too far. We then go back, and here we suddenly have a potential sell setup. Do we like this sell setup? Yes, we do, because that was our larger degree resistance. Market trend is down. Our MTP trend is still gray. This looks like it could be a corrective high. We right mouse click over the red sell bar, put our analysis on, and then this gives us our position sizing. Again, for 2% of a sample $20,000 account. This is a wave 3 setup. What is a wave 3 setup? It's when we're ideally looking to catch the end of a wave 2 to trade the wave 3. That's why the target is the typical wave 3 WPT. And I'll show you why we like these trades right at the end of this little discussion. Let's move forward. Now, I think in real time, the market actually went up and actually went to your stop level before the entry level. So in real time, you'd have probably not even taken this trade. In other words, you'd have cancelled your order because it would have invalidated your stop level before coming into your entry level. But can I take the worst case scenario? There are very few trading gurus who take the worst case scenario, but I always like to be pessimistic on this because I think it's a good training exercise to always be on the side of caution. So let's assume that was a 1-hour loss. Let's assume you'd lost $400 on that. Let's clear off. Suddenly you then get another trade setup. Again, nothing's changed. Exactly the same. We do our analysis. There's the same position sizing. There's your target. Exactly the same. You then put your orders in. And let's again take the worst case scenario of you being filled and stopped out on the very same bar. That would be another 1-hour loss. So suddenly you've got what was a perfect start to the day, and suddenly you've made 2 losing trades. You're down 2R. So of course, this is when the psychological place of the market starts to play on you. You're down 2R, it's on a Friday, you're panicking, you want to end the week with a positive day. No one likes to have a losing day on Friday. So let's see what happens as you move forward. Suddenly you get a third attempt. So you say, okay, right, nothing's changed. There's our larger degree resistance. Our MTP trend is still gray. This still looks like another good value or good potential trade setup. Let's place the analysis on. There's our target. There's our position sizing. You see how the number of contracts has changed, but the initial risk is still 2% of a sample $20,000 account. So you then go for that trade setup again. By the way, one interesting thing that actually makes that particular setup better or more juicy, we'll say, than the previous two is the DP from the last swing into the high or low. Now, I've been stressing this so many times over the last few weeks. This is a real nice tip. So come on, guys, you need to remember this. That would have been the last low. In fact, let's go back a little bit. Let's go back to there somewhere. That's the last swing into the low, isn't it? There's the low. That's the last swing into the low. If you right mouse click off this pivot, that is an area of potential resistance. This is nothing new. I do this week after week after week after week after month after years we've been doing this. This doesn't always work, but when it does, it's quite nice. So can you see how that would have given you an area of resistance on the chart before the market even got there? So even though these were valid trade setups, they were not as nice as that one that unfolded at that DP from the previous swing to the previous low. Can you see that? Can you see why that's a little bit more juicy and would have excited you a little bit more? So let's now place the analysis on. Let's now move forward. Actually, I'll just take that off because I don't want to confuse that. That was just a PS. So here you were, minus 2 hour already. You're now getting ready for a third trade. You're in it. You're, oh dear, it's panicking a little bit. You're still panicking. Suddenly you've got to 100% initial risk. So here's the first dilemma. Do you now bring your stop to break even? Now it's past the 100% initial risk. Remember I said on this TS3 buy setup, if you're aggressive, you'd bring it to stop to break even because you're against what was perceived to be the large degree trend. At this point in time, has anything changed with respect to the large degree chart? There's the higher time frame resistance. The market's made a move down. It's made an ABC correction up and is now starting to move it down again. Nothing has changed with respect to the larger degree chart. The only thing that has changed is our MTP trend has turned blue. This is where it could start to play some psychological games with you. If this had been red, then I think you'd have had a lot more confidence. But let's now move forward again. Market then starts to go sideways a bit, starts to go down. Suddenly you get a potential buy setup. So again, this is where if you never come to any of our training here, you'd have looked at this and said, a tier 3 buy setup, our MTP trend is blue, I want to go long here. But is this a good trade to take? No, it's not, because remember guys, we are not trading off our MTP trend, then our larger degree chart position. It's the other way around, okay? The large degree chart position, in other words, the DPs off the higher time frame chart is what takes precedence every time. And this is what I need to stress every single webinar. Our MTP trend here is a guidance. Okay, it's a guidance. It doesn't get it right 100% of the time. And this is one of those times when it would have been lovely if it had turned red, but it didn't. It turned blue. So it would have actually played some psychological games on you at this particular point in time. Because remember, you'd have been minus 2R down already. Let's grab this up. You'd now be sitting on about 2R profit. How many of you guys have actually been in this position where you've been down a certain R percentage and suddenly the market's given you that R percentage and you're perhaps getting on late in the day, or in this case a Friday afternoon, and you're just desperate to come out at break even? In other words, the market is playing psychological games with you to tell you that, oh no, you've got to stop your loss. You've got to stop your loss. Don't know about you guys, I've struggled with this really a lot in my early years. This is really, really hard. TJ, weekly DPs are used on daily charts. It doesn't matter what day of the week it is. So let's see what happened. Or maybe rather than wanting to just take your 2R profit, which I know quite a few of you would have actually done, you might then panic and say, right, I'm going to bring this to stop to break even. We've got quite a way up. I'm just going to bang my stop to break even. So what happens? bang, it goes to break even, you would have been stopped out. In other words, you'd have got your wish. The market has given you your break even. You're now out of that trade, but overall, you're minus 2R down still. Technically, where is the area of support or resistance off a completed ABC pattern? A, B, C. So where is the support and resistance of an ABC pattern? Remember, guys, you should all know this. Yeah, I'll just say it another way. This is the last swing into the high. In other words, that was the wave C. That's the high. This is the last swing into the high. So I'll do exactly what I did a couple of minutes ago. I'll go down to this low here. I'll right mouse click. I'll put this DP on. That is the area of potential support where the market is likely to make a reversal from if that is going to fail. Has it reached that level? No, it hasn't. So what happens? The market then reverses straight back down again and then starts to then reach that particular level. So can you see how it would have been too early to move your stop to break even then? Now you could probably do it. Once it's reached the DP off the wave below, now you can start to bring it to break even. And if you had, the market then starts to decline down quite nicely. So that's the first area I really wanted to stress to you guys. There's two sort of, or a couple of steps to becoming a good trader. The first and foremost, most people have to struggle with when they come to MTPredictor is that we know 95 to 97% of amateur traders tend to lose when trading. It's a horrible statistic. There's very few people ever make it. And the first thing that we have to try and do is stop you losing. Now, the first way to stop losing is to keep the losses small. That's why when we have the losses come through, they're kept small at minus 1R. In other words, your losses are small. That's the first step, keeping your losses small. Now, quite a lot of you guys, that is not so hard to do. But then the big problem, I think, and this is why I'm doing this whole webinar today and really stressing this, the next big problem is then how to then make your profits run. Because the way you make money, the big boys make their money, is once you've started to keep your losses small, you have to then learn to do the other side of the equation, which is get your profits large. To get your profits large, you have to let the market run. It has to have time to run in your direction. And that is where the market plays all the psychological games that I've been talking about now, and why I think so many people find it hard to do really well as a trader, because, as I've said, they'll want to come out with a 2R profit. They'll want to bring their stop to break even. Everything too early. The market hasn't told you that it's going to go the opposite direction. Another area where you'll be panicking is what happens then when you get down to this DP level. So I'll just take that one off. We're not losing that anymore. And now the market, late on Friday, it's what, 2:30, just past 2:30, 2:45 in the afternoon. You've made a 2R loss. You're now sitting on 5R profit. You could say, actually, I fancy taking that. And that puts me 3R up over the day. And you say, thank you very much. You go, phew, and come out. Let's have a look technically at what the market's telling us. Down here, our MTB trend has gone strong. In other words, it's gone beyond our strength band. This is telling us that the market is probably going to go further. So what does it do? It goes back up again. You might have said, phew, I'll come out with 5R profit. I'm really happy because the market's retracing back against me. And then suddenly, down she starts to go even further. And down she starts to go. Retraces back a bit. Starts to retrace back up a bit. And you say, oh, phew, it's now above where I came out. I'm okay. You know, I've done better than what I thought it was. But then suddenly it reverses straight back down, goes down like a stone, hits your original target where potential 10R profit was available. Now, what a big difference this makes to your trading day. If you were 2R down to start with, by having a 10R profit at the end, that makes you up 8R overall. Now, 8R is a really good profitable day. So do you see how much difference it makes by letting your trades run and allowing you to then run to the higher profits. And this is why I'm stressing this one in so much detail, and I've gone through in so much detail, and I wanted to cover each little area by showing you, or perhaps working with you at each different area and discussing the psychological games that the market is playing at that time. Because I don't know about you guys, but I've been through exactly the same. You get to these levels and the market is telling you, go on, take that small profit, take that small profit, bring that stop to break even. It's just nagging at you the whole time, and it's so difficult to let these trades run. It is so difficult to do. I mean, Don said a good way to do that is once it went strong here, you can then use your ATR stop, which is your red dots down there. And yes, that would have held you in, Don. That would be really nice. So that's one way you could have done it. And obviously, if you're using our MTP trade module, so our MTP trade module is in NinjaTrader. Here's our trade module, because if I now place the analysis on here, when you do the trade, this will then place the orders automatically for you. So it'll do the sell order up at that level. It then place the stop at that level, and then your profit target at this level automatically. It will just do it for you. Then it's up to you to mess with the trade. In other words, you have to actively mess around with it to basically get it wrong. It's yours to lose effectively. So it becomes a little bit easier to help manage it. But obviously there are tools in here to bring to stop to break even, and the ATR stop as it's going with you as well. So there's plenty of areas where you still can mess up as well, but at least that helps you. Now, obviously, this isn't always the best reason, because if any of you guys have been with us for a while will know that sometimes I've said, well, actually, when you get to certain levels, perhaps like this level here, because this would have been if I right mouse click, this would have been a major support level, I think. Let's clear everything off. If I do a major on the DP, yeah, it'd be a major support. So if you get to that level, you might say, well, the market might well reverse it there, and then you look to bring your stop a bit closer. That will then depend on, like this is on the YM, depend on what the position was on the ES at that time as well. So what I'm trying to say to you is that what you need to do is you need to let the market run unless, now this is a big unless there are other reasons, good reasons, why you think the market is then going to not get to your original trade and reverse at shorter levels. In other words, you need to find reasons why to stay in the trade rather than get out of it. In other words, you want to look to stay in a trade and run it further rather than look to come out. In other words, don't try and be trading with scared money. And that's what I'm trying to sort of get over here, is that the psychology of the market is trying to tell you to be scared the whole time. It's trying to tell you to cut your profits all the time. So what I'm trying to do here is trying to get you to use the chart to give you confidence to let the market run, and in that way to try and then get your larger profits. Now, the hard thing is there will be times when the market will hit these levels and go back up, and you would be stopped out for a smaller profit when you were trying to let it run to higher levels. That this is not easy. I've said it loads of times, and I find it very frustrating when there's so many gurus and software vendors out there who keep telling people that trading is easy. You just have to follow this, follow that, and you'll become a millionaire overnight. I just think they haven't had any experience. I don't know about you guys, but trading is really, really difficult. I know this is what I shouldn't be saying because it doesn't sell software. We're a software company. I'm telling you guys that it's actually hard. But actually, I want you guys to be grounded in reality and have a look at these kind of issues so you know how to tackle them. You know how to try and work through it yourselves. And we did a good example of this with an example on Forex with Bill from Australia, must be about 6 months ago, looking at exactly the same issue, in that how to tackle when the market was getting to various profit levels and having the confidence to let it run. So I think this is the big step to becoming a good, successful trader, is having the confidence to allow the trades to run. It really is. But you can see here, the markets need time. What this was about 1:45. This was what about 3:45. So this was what, 3 hours, 2, 3, 4, yeah, 3 hours that you would have been in a trade, watching every little wiggle as it goes. So there's plenty of time for the market to play psychological games on you. So I just wanted to do that for today's, or the main part of today's webinar. And has that been helpful to you guys, going through a bit about the kind of issues that can come up and trying to have a look at it, in ways of using what we've got here, particularly using the DPs from the levels that we know normally produce reversals, and knowing when you're against the large degree trend. Like here, if the large degree trend is really clear and really obvious, and you think the large degree trend is down, that's the only time when you want to be bringing your stops to break even, when you're against this. So like if you were long off this TS3 buy setup here, that's when you bring your stop to break even, because you're against what's perceived to be the large degree trend when the picture's clear. When you're with the large degree trend, like this, then you need to have the confidence that you are with the large degree trend, and then you want to try and run with it. But I'll make no bones about it, this is a hard one to do. But if you do, the result is you get nice trades like this. And of course, these don't unfold every day. I wish they did. Another part of the psychological part of trading is having the patience to not get into silly trades. Have the patience when the market picture is not clear. So for example, if I turn this lot off, there's perhaps some sell setups here yesterday. MTP trend is gray, you might be tempted to take those. But if you now go out to the higher time frame chart, by the way, just going back to if I'll just take that all off, I'll come back to that in a sec. Has this area here reached an area where the support? Well, but it's not clear. It's not clear what's going on. At this point in time here, it was just lovely and clear. It was lovely and clear. That was initial decline down, a wave 2, then a wave 3. Let's look at today. What's today doing? Well, are there any resistance areas? Not really at all. I mean, here's the last swing into the low. That's a resistance area up there. Has it reached that? No. So you're basically in the middle of no man's land. So at the moment, you're looking at this and saying, well, what's going on with it? Sylvian said the NQ might be in a slightly different position. So let's have a look at the NQ. So here we just take everything off. By the way, the NQ as well on the Friday, that gave you extra confidence. Look at the NQ there as well. Look, the NQ declined down there absolutely perfectly as well. Look at that, smack bang on there. Just a pity it didn't make a nice ABC setup. So here's the last swing to the low. We right mouse click off this pivot. There's your DP. Before today even opened, would have given you a resistance area. What's the NQ done? Well, the NQ has gone smack bang up into that and has now made a high beautifully. So yeah, so now the NQ looks like it could be in a good picture or a good position. Randolph, thanks very much for that. So Randolph said that he hasn't experienced anyone saying how hard trading is till he came before MTPredictor. Well, thanks, Randolph. I do hope to try and give a big dose of reality in my training here, and just hopefully it helps you guys by being very aware of how hard trading is and the pitfalls that it has, and that will hopefully then allow you to then work through these. And it does take time. It takes a lot of time. Let's have a look at the ES as well. So the ES hasn't quite reached its DP either. So it would be nice if a lot of them were together, but the NQ does look like it was there as well. Let's have a look at the 24-hour chart. It'd be nice if the NQ was at resistance on the 24-hour chart. Let's just change that, whoops, onto the NQ as well. Yeah, on the NQ, there's the last pivot low. So the NQ has actually gone down into DP support there. So it's no wonder it's rallying back up again at the moment on the 24-hour chart. So it'd be interesting to see what actually happens now, whether we do get a corrective ABC rally up here. Yeah, PH has mentioned a very good thing. He says it's hard to stay disciplined, but trading itself is best done unemotionally and take the long-term view. Exactly, PH has got it dead right. In other words, what you should not be looking to do is not to look at every trade. In other words, you don't judge your performance on a daily basis, a weekly basis, even a monthly basis. You look at how you've done over the whole year or the 6 months. In other words, you take a longer-term view on it. And that's something, again, that seems to be different to what most software, I mean, software nowadays, I don't know if you see a lot of the forums and things, is that they seem to be going shorter and shorter term. There's sort of a high frequency trading. In other words, in and out, in and out, in and out, in and out all the time. But as I've shown you, the best trades take time to unfold. The best trades are not in and out, in and out, in and out. The only person who does well at that is the broker. So it's no wonder brokers love this kind of high frequency trading and scalping. I mean, they're going to promote it to the hilt because, of course, they make money every time you trade. Brokers hate this kind of trading where we sit on the trading on the sidelines waiting for the best trade setups, and then when we're in a trade, we let it run all day. You know, they actually hate that. But of course, the problem is that is the best way to trade. So what's good for your broker is bad for you. What's bad for you is good for your broker. And I'm afraid to say here, the person that I like to look after is number one. Chris says about following one market. Well, if you follow all three USE minis, you could have the situation like you have here today, where the NQ and the ES don't seem to be at good resistance levels, but the NQ does. On the Friday I was looking at, the NQ looked like it was at a good resistance level, but there was no ABC correction, whereas the YM does. So sometimes it's, if you're following if you're a day trader on the USE minis, it's good to follow all of them. I think it's that. Right, so that's what I wanted to cover today. I've pretty much taken up all the time today, but I still think that was an important webinar to have to talk about the psychology of trading. So I'm not going to look at any more charts today, I'm sorry, on anything else. I just wanted to focus on the psychology. So have you all enjoyed that? And have you enjoyed looking at the issues that can come up and perhaps giving you some food for thought on how to tackle it yourself and what to work on yourself? And the best thing to do is to follow the market yourself, is go back, look at previous examples, see how they would have unfolded, see what the best thing to do. You know, would it be better for you psychologically to bring your stock to break even? Would it be better for you to let it run a bit further? I can only give you what I see here. At the end of the day, you are the trader. You are pulling the trigger yourself. The trade plan that you run and actually will work best for you is yours and yours alone. And every single one of you is different to each other, different to me. And, you know, it's a very personal thing, trading. Yes, Chris. Yeah, go back. I mean, I do this all the time. Is that, you know, I look at every day again each day. So like yesterday, I'll look at the day before. Today, I'll look at yesterday. I'll keep going back through, just looking at how things unfolded, and just, you know, just try and reaffirm what works. But all with the backdrop of the markets are random half the time. This is, again, the most important thing I keep stressing, is that if you look at this where you want to try and fit in a pattern all the time, maybe just on our MTP color and our setups, then it won't work. You have to have the markets coming in off your higher time frame support and resistance zones to give you a clear picture. If you do it that way around, it's better. So that's the way you need to think. Higher time frame support, DPs, clear pattern. Is that then confirmed by our MTP trend? Not the other way around. Yeah, PH says, so true. It's a battle against impulses and emotions. You must resist your temptation to express your own opinion or feelings on the market or in the market. The market will always chew you up and spit you out. The market doesn't care about you. The market is just the market. So that's why you have to be dispassionate. That's why I think people like to try and have the idea of black box systems, because they take the emotion out of the trading. And that's why so many people sell black box systems or try and get you to design black box systems, is because it takes the emotion out of trading. Now, that would be great if black box systems per se worked, but I don't think they do over the long term, because markets are random half the time. So it's almost like you want to have a sort of combining of them, and that hopefully that's why on NinjaTrader our trade module will help, in that you can place your trade, it'll place the trades for you, and then you can let it manage the trade for you. And I think one of the guys said once you got to this level, you can then bring your stop to the ATR stop, which is our red dots there. So once it got to that level, by then clicking on ATR, which is that button there, it would then automatically move it with your ATR stop down, 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 down all the way, and then stopped you out on the close. Or once you got to this level here, once you got to here, your stop would have been still up at the ATR level, which would have been here. You could just go onto that button, close, and close your position. So that might help managing your trade just a little bit easier. But because we have the ability to override stuff, there's always the ability to mess it up. It's like driving a car. I remember someone was suing a car company because they crashed the car on ice just because they slammed the brakes on. Well, looking at that from hindsight is really stupid. You know, if you're going to slam the brakes on, you're going to skid and have a crash. But because the car didn't take care of that for you, they sued the car company. And it's actually, well, there's always the ability for us human beings to mess it up if we want to try enough. If we work hard enough, we can always mess it up. So that's what I'm trying to get you guys to do, is trying to take that out of it and just try and do the things of only trade when the picture's clear, and that will be less than half the time. Except that even when it's clear, you will get losing trades. Those losses are kept small. That's the first step. Keep your losses small. When you then get into a trade, and it's going to be one that's going to run at a time, except that the market is going to have time to get to your targets, and don't be too keen to come out at break even or small profits unless you're obviously against the large degree trend like you were here. Then you can then be more aggressive with your stop loss. Otherwise, try to let things run a bit further. So that's basically where I'd like to finish today. And I want to wish you a good trading week, and let's hopefully that all works for next week. And we'll be back next week to do it all again. And hopefully you've all enjoyed today's webinar. So I'm going to go off now and see what we all make of our new Prime Minister over here in the UK. So we've just voted in a new leader of the Tory party, which has automatically become Prime Minister. So we'll see what the markets do on that. In fact, actually, let's have a quick look and see what the pound has made of that. So a pound gone down, up, still drifting off again. So the markets haven't quite decided on what they think of the new Prime Minister. Yeah, PH, he was voted in as the leader of the Conservative Party, which, because the Conservative Party here is in power, he then automatically becomes Prime Minister. So anyway, that politics aside, back to trading. Have a good trading week, guys, and let's see how the next week unfolds. And we'll do it all again next week. And hopefully you enjoyed today's webinar.